Hello and welcome to Gold and Silver Assets. It's Sunday the 18th of October 2020 and over here we're heading into spring, thank goodness. I'm very much an anti-winter person. Anyway, today we're going to be talking about tracking explosive price moves. And the reason that I wanted to discuss this was it's kind of an extension to what we discussed in last week's market report. Some of the viewers came up with some interesting points and that got my mind whirring, and I realised that there's actually more to discuss on this point. So let's go ahead. Now, before we do go forwards, of course, we've got our usual warning whenever we talk about technical analysis in the first part of these shows. So remember, if you're not into charts or technical analysis, move along now. For everyone else, let's get going. Let's start with the chart of zero that we showed last week and this curve that I'd drawn. And this curve was actually drawn based on the price movement where we basically took the price movement from roughly here and here and used that to draw this curve and then assumed that it was a parabolic move that was going to ensue. And so based on this curve, you can extend the line going upwards. And that had the aim of trying to predict what the lows of the price movement were going forwards. And I think it did a reasonable job of that, although as we saw over here, a little bit over here, but particularly over here, it's not perfect. But look, it does give you an idea, and it has worked pretty well so far, given the prediction was made at this point here. Someone else pointed out that rather than messing around with curves, which are quite tricky and yeah, it can be quite messy, why not look at the log scale? Because of course the log scale, if you've got a significant move, will give you a straight line. And so this is the same chart but on a log scale, and indeed, yes, you do have a straight line here. So that does look like it's a pretty useful tool. But of course, remember that we're looking at this in retrospect. Prices all already kind of moved at this point, and we're just looking backwards to draw this line. And I always try and think, is this going to work prospectively? So if we look back at the price where we had been predicting the curve, which was roughly around here, I think, then would we have been able to draw this line? And the answer is no. I think we would have ended up actually probably drawing it more like this. And of course, that ended up being way too steep. Another possibility could have been to join these two, but that would have been way too shallow. Possibly these two, but again, that's too shallow again. So although looking at these lines is useful on the log scale, price has to have moved by a reasonable amount and touched that line enough times to actually be able to draw that line with any kind of confidence. And so that was my reasoning for trying to map out those curves that we talked about before. The log scale is good for big price moves, as we mentioned, but for smaller price moves, which can actually be parabolic as well. An example we had was recently with silver, where we had this kind of shape here, but because of the actual numerical price move, I think it was from something like 19 to about 29 or something like that, although it had this kind of parabolic shape, putting it on a log scale didn't really change that shape very much. But let's have a look at more extreme cases. So this is silver priced in US dollars on the monthly scale, and this goes back right up until the 60s. So I think this is around 1968-ish over here. And this here, what you can see is actually, seems slightly curved here, and then it goes vertical, and then we've got a second curve here, and this goes pretty much vertical up here. all the way up to around $42 there. And we've got a similar curve over here, and then price went up. And what about if we looked at this on the log scale? Well, this is just the first peak that we saw on that chart previously. And so we've got 1974 here, and this is that roughly $40-something peak over here. And on the log scale, it is actually still curved. We can try and draw lines, but as I said early on in the move, the line that you draw is going to be too shallow, and so you have to be able to adjust your lines. Now, of course, this second line you wouldn't really be able to draw until very late in the move, and the same goes for this line up here. And so from an early stage here, it's quite hard to work out the trajectory of this. If we look at the more recent move in silver in the 2000s, it's not quite so steep. So again, you do have some straight trend lines here, and there are two of them because that move occurred in two phases. But it's interesting that unlike in the last chart, it doesn't have that curved appearance. And so what happened in the 70s and what happened in the early 2000s seem to be behaving quite differently. Let's go back and look at that polynomial curve that we had talked about last week and see how useful this really is. What I've done here, this is on TradingView, and I've set up the function which any of you can set up. You just plug in the polynomial curve function and adjust the bar duration so that it fits within this price level. And you go into the replay function, so it kind of looks like this on the chart, and you pick your initial time point, which I've done over here. And what you can do with this is go back. So this is actually, remember, it's the 1970s we're looking at here. So you can go back in time and then try and pretend to prospectively see how this curve works out. Now, there's two ways of drawing this curve. One is to draw this and then draw this separately and then extend it upwards. Alternatively, you can just keep this curve here and move forwards in time. But remember that this back end will just move forwards. I don't know how to keep that there and extend that curve forwards, which would be a better way of doing it. But let's work with what we've got. And I've got this video here showing how price progresses and how this yellow line, which is the polynomial curve, which is the mean of the low monthly prices there. Let's see what this shows. So each bar represents the month, remember, and you can see that this curve is a kind of living, moving thing. Part of that is because we haven't anchored this side over here. But as you can see, it's doing pretty well at kind of predicting where the lows are early on in that trend. But as we go higher, it's kind of getting further and further away from this curve. Is it going to touch that curve again on the retraces? Well, it did once, but then prices just shot away from it. And there's a big gap. So it becomes less and less accurate as time goes by. So that got me thinking, why is that? What's going on here? And that got me thinking about different types of growth. We'll start with linear growth, and this is where something increases by a steady amount with each unit of time. And normally, if we look at it on the linear scale, you see it as a straight line. However, if you use the semi-log scale, which is what we use in trading charts, what that means is that this vertical scale is logarithmic, whereas the horizontal or time scale is linear. But for short, we usually say it's a log chart, but really it's actually a semi-logarithmic plot. Anyway, with a linear growth rate, then on the log chart, you're going to see this curve shape. If we look at exponential growth, the formula for this is quite different from linear. Here we've got y equals m to the power of x. And the result of this is that what you see is that the growth increases with each time unit. So there's an increasing rate of change there. And if we look at an exponential chart and look at it on the log chart, you're going to get this straight line here. But interestingly, there is another form of growth, and that's something called combinatorial growth. And that gives you an explosive move here like this. And you can see that it dwarfs exponential. So if you thought exponential growth was cool, this is super cool. And the formula for this is y equals x factorial. I couldn't find what that looks like on a log chart, but I'm presuming it would still be a curve shape like this, just not as steep as on the linear chart. Anyway, I thought that was interesting, partly because we do actually see examples of combinatorial growth. So let's think of some of these examples. Now remember that it's not things that are very common, so you don't see this in just any old stock. The examples that I found this in are in gold in the 1970s, silver, uranium, and Bitcoin. So those are the most prominent examples of those, and so you can look at those charts if you want to have a closer look. The next question is, why do explosive price moves like that actually occur? I don't know the exact answer to this, but I can think of a few possible factors. The first one is the fear factor. So fear is a much, much stronger motivator than greed. And that's certainly true in the case of gold and silver. In the 1970s, there was that fear because of the inflation, and that is probably what played a big factor in pushing gold prices up and silver prices. Another possible reason could be if prices are manipulated and suppressed, then as soon as you get failure of that suppression, then prices explode upwards. I guess an example of that would be if you had a beach ball and you pushed it under the water, and that would be the equivalent of price suppression. And as you let go of the ball, it just explodes upwards up to the surface. Maybe that's one of another example of a reason. Another possibility is where you've got very, very strong supply-demand issues there. So if you've got a huge amount of demand and the supply is just dwindling and getting ridiculously small, and it's something that's absolutely essential or something that people really want, that could be another factor that pushes those prices like that. As I said, there's not many things where you see examples like that in, and so I think it's very useful to study, because in the examples that I've shown, in all of those cases, explosive price moves have occurred on multiple occasions, not just once. And to me, that suggests that there is every possibility that it could happen again. Now, I'm not saying it will, but I'm saying it is a possibility. This is what the price chart for uranium looks like. And as I said, you can see these very rapid, sharp moves upwards. Now, you might say, oh, well, you know, Apple stocks went up by a similar kind of magnitude. But if you look at the time scale over which that happened, it's very different. And so in terms of magnitude, this uranium move here was much, much more rapid. Usually these moves in uranium have occurred over around 3 years. So you've got a very, very steep upwards trajectory in price. The other thing that you'll notice, certainly with silver and uranium, and perhaps a little bit with Bitcoin as well as gold actually, that's one thing they all have in common, is that you have these long periods where it's kind of depressed, not very much happens. And so in terms of the personality of these kinds of stocks, you've got to be someone who's very patient. So if you do get in early, not to get too disheartened. And the other thing is it's very, very difficult to get in as it's starting to go up. A lot of people don't see it coming, and prices can move very, very rapidly. Although this isn't a bar chart, you can get big fluctuations and volatility in price there, which can shake people out. So these aren't easy things to work with, and as you can see for both of these uranium peaks, the drops are just as harsh. One of the things that my experiences have led me to believe is that stocks and sectors each have their own personality. And I found it really useful to become attuned to the different personalities. And as with humans, there are some personalities that you just warm to immediately, and others where you just don't get on with them. You just can't get anything right. And now that might sound a little bit strange, but if you think about it, the markets are made up of humans, and different humans are going to be attracted to different stocks or sectors, and their personality and emotions are embedded in their actions and therefore for the price. Anyway, that's just one of the things that I think. You might think that's completely crazy, airy fairy talk, but I found it to actually work for me. If we're talking about gold and silver, then we're talking about a personality where not very much can happen for a long time, and then a lot happens in a short time. The other thing that I wanted to bring up is that we need to consider a potential for a curved trajectory. The reason for this is, first of all, it's happened on multiple times before, and actually it's interesting, if you look at silver on smaller timescales, you'll see smaller versions of those curves. The reason that it's important to consider curves rather than straight lines is that if you're looking for dips in the price action on the way up, you could completely get the estimate wrong, because a straight line would overestimate how low price can go. And so if we can have a way of drawing and predicting those combinatorial moves, that would be really useful. I haven't found a way of doing that on TradingView yet. We need some smart person who's good at coding to plug in a function on TradingView. The other thing to remember is that with these price moves comes high volatility, and that's something that we need to be ready for as well. Next up, the market update. And we did have a few requests to look at foreign currencies, and so I thought we'd start by looking at both the US dollar and foreign currencies on the logarithmic scales on the longer term, and then after that we'll go back to looking at the US dollar on the daily scale. So this is gold priced in US dollars on the weekly scale, and remember this is a log chart. And what I've done here is try and look at a way of trying to work out the highs and lows potentially going forwards. And so to do this, I've joined the previous highs, and that seems to be working reasonably well. The problem with joining the lows, so if we join these two lows over here, the problem is you've got this over here. And so this is just an estimate line. I mean, it could be completely wrong and we could be looking at something like this. That's another option, but that would call for a potentially quite a large drop in the gold price. I've just left it over here for now, but we have to wait and see what happens. But the interesting thing, and I've been talking about this for quite a while, is the support area in the 1800 to 1750 region, and that's based on the price action back in 2011, 2012. And interestingly, this seems to coincide with that, so it's an extra bit of evidence to support a potential drop to this area. If that were to happen, then I would expect it to happen in the next month or so, and that again would fit in with the seasonality that we talked about in a previous show. Now, there's no guarantee price will actually drop to this line at this point, and that's one of the things, you don't know when it's going to hit the trend line. And another possibility is that it moves sideways for a while and only hits the trend line over here. The other possibility, of course, is that it can go back up, overcome this overhead resistance and keep going. But the other thing that I like about this is that it does help give us some upside targets going forwards. But how does this chart look in other currencies? Well, if we look at gold in British pounds, now this is actually the chart going from 2006 to 2012. And you can see that this follows a very, very nice channel here. We've got a couple of touches on the bottom and 3 touches on the top there. But the other thing is that we've got this line roughly in the middle of the channel, which seems to be reasonable in terms of forming a support line and a resistance line. So what's happening more recently in the pound? Well, I've joined the previous lows and the previous highs and come up with this channel here. And it's been a while since we've touched this lower trend line here. Again, remember we are on the log scale. But I'm wondering if we are going to get a drop in terms of US dollar gold price, that we would get a drop in the pound price of gold. And that would give us a target of around 1360. Let's move on to gold priced in euros. And again, back in the 2000s, we had a very nice channel. Seems to fit reasonably well, except we did have this area over here which didn't really fit in with that channel. And again, we've got this nice middle channel line over here. The problem that I've got with the more recent price action is that I can join up the highs reasonably well, but I'm a bit stuck with regards to the lows. It might look reasonably straightforward from a distance here, but when you zoom in and try and fit a line, it's not very clear cut. So I think that's one of those things where we have to wait and see where we get this bounce before we can actually draw the line over here. But it does seem quite a thin line compared to this channel that we've got over here. And that's one of the things that I've seen in quite a few of the currencies. And the other thing I've seen is that it's quite steep compared to the previous trend. This is gold priced in Australian dollars, and in the 2000s it was a bit messy in terms of the tops here, so I couldn't really draw a nice line there, but the bottoms actually formed a nice trend line over here. Again, this is on the log scale, and more recently we've got a very slim steep channel over here. I've done a close-up down here to show how quite nicely the price has moved up and down within this channel. But the thing is, we've actually already hit the bottom of the channel right now. And so if we do get a drop in the US gold price, what's going to happen here? We're going to have to redraw that line. Maybe it's a question of joining these two over here. I don't know. But the suspicious thing is that this does look rather thin compared to this, which makes me wonder if we've got a little bit more sideways movements before we go further up to widen that channel. I'm not really sure. This is gold in New Zealand dollars, and again, it's looking pretty similar. We've got a nice channel going upwards. Most of the price action is in that lower half of that channel, but we did have two spikes upwards to form a much wider channel. And again, we've got a very nice channel working out here. It looks like the potential touch line over here, if we do get a drop, would be 2750 roughly in New Zealand dollars. And again, this looks quite a thin, narrow band here. But another possibility is that we're looking at a kind of band like this over here, in which case we could get some spikes up. And that could be what forms the upper end of a much wider channel. That's another possibility. And of course, I know we've got some Canadians in the audience as well. So let's look at gold in Canadian dollars. And pretty similar, we've got a nice broad channel going upwards in the 2000s there. More recently, again, a similar problem with the euro, but not as bad. And this is looking more like a kind of broadening trumpet. Again, we have to wait and see what price does to see whether it's actually a channel that's forming and it's just too early to draw the trend lines. Let's move on to the shorter term, and we'll start with gold priced in US dollars on the daily scale. And we've had some interesting price action here. As we remember, we've got this longer term trend line which broke recently, and we're in a short term downtrend at the moment. The other thing that we've noticed here is that we seem to be forming an upward sloping channel. So it's kind of like a flag almost. So we've had this big down movement and then this flag-like action, which to me suggests we've got one more down move of a similar magnitude to this over here. Within this channel, what's been happening is that price has bounced up and down off of that, and then what we've seen over here is what looks like a partial rise, and to me that suggests that that's going to precede this next fall. If we look on the hourly or the 4-hourly chart, the other thing you'll notice is that finally we've closed below this line, and again, to me that suggests that quite early in the week a down move could be expected. The other interesting thing with this is that the target is within this support area that we'd highlighted weeks and weeks ago. And the other thing, which one of our viewers pointed out, is that we've got this line here, which is the 200-day moving average. And again, that lies within that support zone. So we've got a few pieces of different evidence to suggest that price will reach around this area. So we've got all these things that I've spoken out about here, but also remember that log chart on the longer time scales that again supports this view. So my theory, and again I don't know for sure, but my theory is that price is going to go down here and this is where we're going to get a bounce. How big that bounce is going to be, it's hard to know. We could potentially continue a bit more consolidation before making that next up move. That could potentially fit in with that seasonality. Remember that sometimes we do get another dip in mid-December roughly. So it could be that we come up here and then come down before making that next move up. Or we could just blast upwards. And remember that our target is 2,500. That's what I'm working on anyway. If we break down below here, there's a couple of possibilities. One is that it will be very short-lived, so you'll get a kind of big spike, but price will just bounce straight back up and then carry on. If price does go through this zone, and quite strongly so, and stays below this zone, then I would be a little bit more worried, but I still wouldn't be bearish. We're not talking about sub $1,000 gold here, because remember that we are still in a long-term uptrend if you're looking on the monthly scale. But I think for me, the highest probability is that we bounce off this area over here. Let's look at silver, priced in US dollars on the daily scale. And we've got a similar kind of pattern that we're seeing. The interesting thing here is that we've had this long-term trend line here that goes back to the March recovery. And that was broken a couple of times. And in fact, it closed below there briefly over here, and but then recovered over here. And then it again tried to break below, but bounced back. But now we're starting to see some weakness again. The way I've drawn this channel is join these lows, clone the line, and join the highs, or vice versa. And again, prices bounced up and down here, and then we've got what looks like a partial rise before the coming decline. And again, I would expect a decline similar in magnitude to this one here. And so we're looking around this area over here. And surprise, surprise, that fits in with this moving average here. So here it's looking to be about the $21 range. It could go a little bit lower than that, it's hard to know, but that's the kind of target that I'd be working on for silver. And finally, we've got the GDX on the daily scale, and again we seem to have this down sloping channel with price bouncing up and down between it. Interestingly, over here it didn't quite reach the top of the channel before turning downwards. And again, the 200-day moving average kind of fits in with the bottom of this channel here. And so a further move down would fit in with what we're seeing in terms of the potential gold price movement as well. That's it from me. That was quite a long video, but I hope you enjoyed it. Don't forget to like and subscribe. If you want to support the channel further, consider pressing the join button, and we're also available on Library TV. Thanks to those who've given me tips on Library as well. All the best. See you next week. Bye.